Hi guys, welcome to chapter 14. This chapter briefly talks about, going abroad, opening a mutual fund. Okay, mutual funds. The open-end funds was an American invention, but now they're marketed throughout the world. Right, a lot of different countries have different retirement plans and different investment options. And as we've talked about this semester, mutual funds are a great way to diversify. Okay, the foreign markets can offer great opportunity for growth. Because they're less saturated, but that doesn't mean it's without risk. Okay. Here's some areas of opportunity: Europe at 33%, Asia Pacific at 10%, South America and the Caribbean currently at 1%, and North America at 56%. Why do you think South America and the Caribbean maybe have such a small position? They don't have less people. Maybe it has something to do with the structure of their economic system. If they're all on, government pensions in South America, which is, more likely to be the case, especially in more socialist governments, they're not going to have a need to invest on their own, right? Creates, a huge barrier to entry for a mutual fund firm, okay? And like it says, the industry is smaller where barriers to entry are higher. The industry is larger in countries where industry itself is older, more developed, wealthier, etc. The industry is larger where defined contribution plans are more prevalent. Okay, Europe combined wealth of Europe surpasses the U.S. Europe is the second largest market for mutual funds. Okay, in 1985 it passed the Undertaking and Transferable Securities Directive. This allowed for sale of funds across nations. Okay, the euro also fueled this process. Cultures have an effect too. The German fund industry is not as highly penetrated compared to its wealth. They say there's a strong conservatism of German investors, right? And this conservationist attitude actually helped them out in the last financial crisis. They actually left the financial crisis pretty strongly. Okay. Next we have Japan. Japan has enormous potential for fund industry with savings as high as 20% of income on average. Big problem though is the lack of growth is that the Japanese economy has either been turbulent or flat for the last 20 years. People are afraid to invest in the market. That's why they have the high savings. Okay. There was also heavy distribution and regulations in place because the Japanese economy has performed poorly. So has the domestic funds for that country. Okay. So they're very cautious as well. The Japanese firms have to decide what are the most profitable areas to pursue, as they do not have unlimited resources. So there's a higher potential in Japan, but more of a cultural risk there as to whether or not they have the will to buy these investment products. They're very risk oriented in Japan, at least on the institutional side I've worked with, much more risk oriented than the U.S. investor. Japan has a greater pool of available wealth. However, investment psychology is difficult to overcome. Europe is more comfortable with mutual funds, but the market is more penetrated. Those are the big differences here. Culture, distribution, and tax differences are the main cross-border considerations when considering expansion. Another thing to consider with any kind of, this is more of a general business topic, organic growth, alliance, or acquisition. How do you want to expand your business? You can do it yourself, right? You can form a partnership with another company, or you can just buy another company outright. Right? Each one has their risks. Okay? Many firms try to enact a hybrid strategy. Okay, and that's it for this chapter, guys. Please email me if you have any questions.